Good evening, everybody. Thank you for coming tonight to the March 23rd Trader Vision User Workshop. For those of you who don't know, and for the recording, my name's Ed Carter, and I'm the architect behind Trader Vision. Along with Doug Campbell and Rick Sadler, we're the guys that bring you the product. So I want to thank you all for coming out tonight, and in fact, I know it's very early morning for those of you on the other side of the world. But thank you so much for coming. Here's what I want to try to get through tonight. I'm going to work through 6 trades over the course of the evening, all set up for tomorrow or Monday or sometime soon. So they're either ready to go or they're watch list items for you. And I want to use those to illustrate the planning and validation process for trades and show you how that differs between version 1, the current version, and version 2, which is under development right now. So I'll give you a little sneak peek of that. I'll answer any questions that you have, and we'll kind of go from there. So are there any questions before we get started? I guess not, so let's just dive right in. So the first trade I wanted to look at, and I guess maybe I hate to do this, how do I want to do this without going back and forth? I guess I will try it. I guess maybe before I start that, I should talk a little bit about the market, because that goes into how we trade, how we plan our trades, and how we actually execute our trades as well. So if we look at the overall markets, we can see that the SPY is trending down. The 1Q and Qs are kind of grinding sideways, but in a very short-term downtrend. And the small cap IWM is in that downtrend. And all of them seem to have this very bad day on Tuesday, an indecision day on Wednesday, and then basically an indecision day today as well. Richard, we'll get to that in a moment, because I'm not sure where you're talking about. So let's with the markets that way, you would be well advised to not buck the trend too much. In other words, I wouldn't get completely long in my account. I would be a little bit cautious if I were to advise you, because it looks like we've got some resistance overhead, and we've got this entire chop area to work through just to get into the position to break the trend. So be cautious to the long side, but I know that the vast majority of traders trade long only. So let's look at a few trades so that we can talk about the differences in trade plans. Here's a longer view of UCTT, and you can see big, beautiful rounding bottom. It's been broken out and trending strongly for quite some time, and most recently here has had a little pullback. So let's pop that into a larger size so you can see the pullback. Drag that here. So here's our pullback. We've run up here, pulled back again that big bad day on Tuesday, a doji or indecision day on Wednesday, and a little bit of a bullish candle here today. All of this bouncing off of the trend line. So we've got a Morningstar type signal that shows us that sentiment has reversed, and we're in a strong uptrend. And so this is a very nice pullback opportunity, hoping for a J-hook breakout here. So if you look at this level, and in fact, let's this. I don't know if this goes back. No, it doesn't. So if you look at this level, this is our support level. We also have some support here off of this trend line. But if I'm going to put my my position in place, I'm going to put my stop down here below this support level to protect my stop. I'm looking for a breakout here, and then I'm looking for the 38.2 extension of this run. This being at all-time highs, the only way I can really do a decent job of planning is to use fibs to set my targets. So I'm looking at the 38.2 and the 61.8 extensions for my targets. Let's open this up. So this is version 1, and this is what it would look like. You would select an account, enter your ticker and a direction. You would select a bias. In this case, the ADMA is above the 34, and the SPY is trending 50 is up and rising. I'm calling this a bullish Morningstar in a pullback opportunity, and that's pullback is happening in a strong trend. So if I put my buy price in at about 15.38, which just, that's the current price, I just threw that in as a buy price, and my first target in at 17.20, which is just a bit below the 38.2 fib extension of the initial run. My second target just below, a few cents below the 61.8 extension, and then a reach target up here at the 100% extension of this initial run. So if we got that full run, that would be up here about 19 bucks. My stop, I'm going to drop in a few cents below this support level here, and that calculates out to me, it gives me just under 3-to-1 risk reward. So I'm risking about 4% down to a stop that's down here below for a gain, here we go, for a gain of about 11%, a little over 11% up here to the first target. So that's what it gives us. It's in this particular position for this demo account. If I buy 300 shares, that is a little bit big for this account, so it's about 4.6% of the account. I need to get about just under 6%, 5.85% gain in order to make the goal to keep me on target for the goal for this account, which happens to be 25% gain for the year. And my break even is about 15.45, so it's just a touch, just a very small move to break even. That's what it looks like in version 1, and that's what the plan would look like. And this is a valid plan, and I will probably let you guys have access to the PowerPoints later on. That's probably the best way to get that out to you. But let's look at it on version 2. So version 2 is a little bit nicer, a cleaner, more modern interface, if you will. And you'll notice several things. First of all, a lot of the data entry is taken care of for you. In this particular demo account I've got set up, it's measured against the IWM as opposed to the SPY as I had set up for that demo account in version 1. So what it has done is it's gone out and grabbed the market bias based on the rule that we've defined for the IWM, and it says that's trending up. It says the market bias in the short term based on the 5 SMA rule that I've defined is IWM is trending sideways. The individual stock, UCTT, is trending up over the longer term, and the short-term bias, as defined here, is also trending up. I've got a moving average relationship also defined, so the ADMA versus the 34 EMA, and that's trending up. It's got a liquidity of $8 million per per day of stock traded, which is fine. It populates the candle signals, which you can see here that the last 5 candles we've had this, or last 6 candles, we had this pullback, and we've got this Morningstar type. It's not exactly a Morningstar, but it's a Morningstar type. And if you hover over each of them, you can see the open, high, low, and close. It then looks at the pattern, and it populates this pattern as well. So it has told us that we've got a pullback opportunity, and we've got a bullish, let's move this over so you can read that. So we've got a higher low and higher high, and I believe it also says we've got a bullish triangle setup. So that's what is all populated here for us, telling us about the conditions of this trade. It tells us that we've got 4 bullish conditions and we've got 1 potential bearish condition. That's, you know, kind of like the idiot light on your car dashboard. Trade plan is very similar in nature to what we had in version 1, with the exception, you know, you would enter your prices and it tells you how many shares you should buy based on the rules that you set up. Now, this particular account is set up to calculate position size based on volatility risk. But if I had it set up the same way that version 1 was set up, it would base it off of the maximum risk to stop. In either case, it calculates out how many shares that you should be taking, and you fill this out very similar to what you do in version 1. One difference is that you can edit each and every commission. And that was something that had been requested by users. The second thing is that you'll notice here that you can set alerts on the entry, on any of your target exits, on your stop, and those will all be unique based on your setup. Now I can't, come on. Yeah, it's not going to let me open it up. You're just going to have to trust me tonight. But there's about a dozen built-in sound effects that you can use for your audio alerts. And every time you set one, it pops up and tells you that you've set an alert for the entry or for an exit and so forth. And when they execute, you'll get the same pop-up and you'll get the audio alert. A couple things to note here before we get into the trade setup. If you are not set up for a brokerage account through MB Trading, which is the initial broker that we're working with, you will have these buttons to move the trade details from the plan to the execution section. When you do that, if you are connected to the brokerage account, you would be able to hit a place trade button to either place individual lines. MB Trading, which is part of Trade King, which is now part of Allied Bank. I know that's a little bit convoluted, but they've got some mass behind them now, with Allied Bank having closed that purchase. And they just did the integration with Trade King here back in January. So MB Trading is a wholly owned subsidiary of Allied Bank, and right now the schedule is that by the end of the year they will be integrated and it will be branded as something like Allied Trade or something of that nature. I'm not sure what they're going to do branding wise. But that's the initial brokerage that we're working with. And you would have a place trade button, and you can either place individual, so the entry and a target and a stop or whatever one you wanted to trade, or you could push the place trade as a basket or as a group, and it will place all of the trades for you at once. So your entry, your X number of exits, and your stop as one group of orders being processed at one time. let's see what else I can tell you here. Over in trade setup, these are similar in version 1. These are similar to information like the break-even price, the shares to buy, the total cost of the trade. Basically what I've got here is tan fields, the risk reward and so forth. Down here, what the comparison indicator is doing. Thinkorswim won't work with this, Andrew. They say they want to, but they never follow up. And basically that's kind of the logic that was used to select MB Trading to start with, or Trade King, because they are young and hungry and want to move up with Allied Bank. Trade King, Roger, is the third one. Yeah, if Thinkorswim ever comes to their senses, I would love to set up the integration with them. But as of now, we'll launch version 2 with MB Trading, which is Allied Bank, which is it's all all the same thing. It's Trade King, but it is Allied Bank now. So, at any rate, all of these 10 fields, which are the key characteristics of the trade, are now over. Let's minimize that. Are now in this trade setup column, and they will tell you. You'll notice that they're color coded as blue on the left side. That corresponds to the trade plan section, and green on the right side. That corresponds to the trade execution section. So why would they be different? Let's say, for example, that my trade plan was to enter at 1538, but price moved on me at the open, and I either got in at 1530 or I got in at 1545. So the prices could be different, and that would affect the break-even point. It would affect, everything could change. So maybe I, instead of buying 300 shares, I ended up buying 250 shares. And maybe in the actual execution, instead of having 100 shares at my target 1, I actually ended up having 120 or something. Yeah, Evan, if you've got some pull, we'll listen. We'll certainly talk to anybody that wants to talk. So at any rate, over here on the trade setup, we have all the information that we need, the shares that we buy and how we're calculating them. In this case, we're basing it on the volatility risk. So a 13-period ATR and 1.3 times that is what we're using to calculate the shares to buy. It gives us the cost to enter. It only gives us as a plan because we haven't entered this trade yet. It tells us the percent of this particular demo account. It would do the same thing on the execution side as well. Something else that you will note, in version 1, your risk to reward ratio was hard-coded to be your stop loss versus your target 1, your exit 1. In version 2, you have the ability to say, well, I want it to look at exit 1, I want it to look at exit 2, I want it to look at exit 3. It depends on how you want to look at your risk reward. Do you want to look at it versus your first target versus your overall trade? How do you want to look at it? So you have a lot of flexibility there. It tells you what the target price, or I'm sorry, the target to meet your goal for your trade is, both in terms of dollars and what that would be in a percentage gain, how much we've got at risk to the stop and to the next target above us at this particular time. Yes, Arnaldo, yes. Thank you, Evan. I appreciate it. It is, and it will be. It's also going to be available on the website. So that's what the trade setup column is for. This is a separate window, the trade chart, and it could be pulled off to a different monitor. It doesn't have to be there at all if you don't want, or it could be, in fact, built into this primary window. You could do them tabbed if you prefer. There's a lot of flexibility in version 2 as to what you want to see and how you want to see it. But for now, I've got it set up this way to illustrate the point that in version 2, when you enter a trade in the trade plan, it will populate lines on the chart. When you enter lines on a chart to do chart-based entry, it will populate the trade plan for you. Obviously not the shares, but it will populate the prices. Same thing goes for trade execution. Will version 2 be on your website as a demo so we can work with it as a demo? I'm not sure exactly what you mean by that, Sarah. We will continue to do a free trial, but if you mean, I'm not sure, I don't recognize the name, but if you already have version 1, you'll get version 2. I guess you're meaning be able to play with it before you convert over, perhaps is what you mean. And we'll come up with a trial that you can do, but there won't be a working version kind of widget on the website or anything of that nature. There'll be videos and there will be documentation, but not an interactive demo version built into the website per se. I'm not sure if that answers your question or not. Arnaldo, when it's available. I get that question all the time, up to and including from Doug and Rick. As soon as I can. Every time I promise a date, I know I'm going to disappoint. We are working as hard as we possibly can, and we just got a lot of bugs. You saw a couple of bugs here earlier. It's still full of bugs, and there's still a lot of features to be built out, but we're working on it, and I would expect sometime, this summer, maybe sooner, but really it's going to come down to when it's available, because I have to do all the support myself, and I'm not going to release a buggy software because that it would upset you guys and it would just create 1,000 little problems that I've got to chase later. So we'll try to pound them all out before we release the product. Yes, Evan. In fact, let me talk a little bit more here. So what we've talked about so far, and what we'll talk about later tonight, is the planning of the trade. So you've got, remember my whole focus and the idea behind the product is that it's process-based. So you've got goals. So you know how you need to manage your trades. You need to select trades that will meet your goals. You need to plan trades to make sure they meet your goals. You need to manage your trades to meet those goals, and so forth. So that's the goal setting and trade planning functionality of the product. The other side of it, the back end of it, is that you need to journal your trades and track your performance. And that's something that this does extremely well. In version 2, every time you change a price, so you move your stop, it automatically records the adjustment and says the stop was moved to XYZ on this date, so forth. The target price 1 was moved to ABC on this date. So it tracks all your adjustments. You can keep as many notes as you want here. You can attach as many files as you want here. For example, as many screenshots of the trade setup as you want, before, during, after, and 3 times during the trade, as many as you want. can all be attached to this trade. You also then grade your trade when you close it. So you give yourself a grade on your discipline. Oh yeah, Roger. I'm a user too. I sure don't want anything buggy when my money's at risk. I don't want to upset customers, and it's just my my personal makeup. I won't release it until I think it's ready, and I that may upset people, including Rick or Doug. We're all in a hurry to get this, but it's going to be ready when it goes out. That's a promise. So you grade not only your discipline, but what sorts of mistakes did I make? And this is just, a casual list. You can add anything you want. So I don't know, what kind of mistake might I have made? I had my stop too tight. I stopped too loose. So it records all of these with the trade. So when you have fat finger, anything you want as a list of mistakes. And then following up on what somebody said earlier, I guess it was Evan, in the performance reporting, you'll get performance reported by pattern and by signal, by market condition. So for example, by the moving average that you have set up as being important to you. So the moving average relationship of, in this particular case, the 8 EMA versus the 34 EMA. And you'll be able to see, well, how have I been trading when I'm trading with the 8 EMA, I'm long and the 8 EMA is above the 34 versus when I'm long and that's not true. You'll also be able to see how have I been doing when I make this particular mistake. The stop's too loose, or my stop was too close, or whatever, I chased my entry, whatever problems you have logged. And so this is the journaling and the performance management piece that closes the loop. We talked about the process, that circular process that I've talked about. And so we've set goals and we've selected trades and we've validated the trades and we've planned the trades and managed the trades. And now we have executed a journal on it, and we have tracked our performance and analyzed that so that we can then improve our goals and plan our trades better in the future. We know what's working for us, we know what's not working for us, and we can basically stop doing what's not working and do more of what is working. And that's the whole idea behind trading success, trading discipline, and trading with a plan. So this is just a very brief look of the trade view, if you will, of Trader Vision for version 2. I just wanted to give you a very brief glimpse of it. We're not going to use this much the rest of the night, strictly because it's buggy and we've disabled many things in order to present it here. So I've only got one of the 5 data feeds turned on here, that sort of thing, and that is sometimes problematic. Okay, any questions before I move on here? Aaron, not that it matters, but it's in Delphi, and it's very efficient. My programmer is just excellent, and in fact, we spent some time optimizing a section of it here just a couple days ago. It's if you're not familiar with Delphi, it's an old school language. It's been around since a company called Borland owned it, and it's got a ton of libraries, tens of thousands, hundreds of thousands of users probably, and that's kind of why we chose it. It has a very robust background with lots of libraries available, pre-built things like charting indicators and so forth. For example, we can add, these are improvements since version 1. In version 2, we can now add horizontal lines and vertical lines and text and put in Bollinger Bands, circles and rectangles and MACD, RSI, put in the ATR, put in Fibonacci. We've got a ton of improvements, and that's basically because we chose a package like Delphi that had pre-existing libraries that we can not have to invent the wheel all over. Okay, so let's move along here. Back here. So I guess the next one that I want to look at is ITGR. And let's back out here so we can get a bigger view of it. So ITGR is a similar situation. It was a beautiful uptrend here, and we had a pullback, and we've got a Morningstar type off of this. It's not exactly a Morningstar, but it gives us the same feel, the same sentiment is reflected in this as a Morningstar within this beautiful uptrend. Now let's zoom in so you can actually see it. And this is what it looks like a little bit closer up. So here's an obvious support level, and we're getting some support off of the trend line, and then this is the Fibonacci retracement extensions that I've drawn, and you'll notice that the 23.6 fib retracement is right here. So we kind of we came in between just below the 23.6. So that's kind of the level I have chosen to put in as the stop. I split the difference between the 23.6 and this 38.34 kind of line that I drew off of some of these highs. We've got about, what is that, 4 or 5% up here to the breakout level, but because this is at all-time highs, I believe, no, it's not. I'm sorry. It's not at all-time highs, but we've got about 4 or 5% up to this 41.70 something level. I guess 41.80 we'll call it. And then we've got another 11%, 11.5% up here to the 38 extension. And then up here at 49, we're ending up, that's where we're filling a gap, and we can see the prior support, which will become resistance now. So someplace in there, that's the 61.8 fib extension of this run, and also fills the gap and also has that previous level of support there. So that's where we're going to set targets. What does that look like? So on ITGR, what we're looking at here is, I'm going to skip most of this stuff. I called this a bullish Morningstar. Again, it's similar sentiment, strong down day, day of indecision, bulls have stepped back in. Yes, from a textbook standpoint, we did not close halfway up this red candle, but it's close enough for government work, in my opinion. It's a nice pullback opportunity in this uptrend. We're looking at an entry. I just chose the current price of 40.15 for argument's sake. We're looking at target 1 up here at 46.50, which is the 38.2 extension of this run. And then the second one is up here just below this, so about 49. So it's a little bit below that resistance line and a little bit below the 61.8 fib extension. I use 3850, which is splitting the difference between the 23.6 fib retracement and that 3834 level from the highs. So that gives us about 3.5 to 1, 3.75 to 1. At 100 shares for this particular demo account, that's 4% of the account. That's probably a little too much, but you know, you'll do your own position sizing. We're looking at 15.4% to the first target, and we're looking at 21.5% up here just below this level here. So that gives us a very nice gain. Initially, we're looking at 4.3% risk versus that 15.5% gain. So that gives us the 3.5 to 1. So that's a very nice trade, and again, that's something you should look at. I'm not sure that I'll be doing a lot of entry. I never really do entries on Friday because of event risk over the weekend. That's particularly true in this new environment with the new administration and Congress trying to redo the health care bill, and you know, there's a lot of event risk, and I don't see a lot of benefit to getting in on Friday. But I will be keeping an eye on this and probably looking for an entry on Monday. But that gives you a nice plan there to work with and something for you to look forward to. Overall on the trade, if we were to execute it as just like this, we'd get about 18.5%. And that's better than a poke in the eye, no matter how you look at it. So the next one I want to look at is WD. And let's do WD here. Sure, let's see what I can do there. Just a second, I need to make a note. Okay. Let's do chart-based entry. This is version 1's. Oh, I'm sorry, Roger. In the new version, no, I can't. I can't do that for you tonight. That's disabled at the moment. I apologize. Do you want me to try to show it to you in version 1, or would you rather just wait? Your call. Okay. So in version 1, let's put in our entry, and we'll drag that. Oh, let's try that again. We'll drag that down to, what did I say, 43.10. Let's call that close enough. So there's our entry. We're going to have a target at $47.20, close enough. Another one at 50.10. Yeah. We'll call that good enough for now. And a stop loss at 41.30, I guess I had it. Okay. So that's where we've got our initial plan set up. We've entered our entry and our targets and our stop loss. And if we close this down, then you'll see that we have entered those values into the actual execution, and we just need to then put in the shares that we want to have at that level, and then the date which we are doing that entry. But let me go through the plan first to just show you the numbers. So I had 43.10 as my initial entry, 47.20 and 50.10 as our targets, 41.30 as our stop loss. How did I come up with those numbers? Well, being at all-time highs, I believe. Yep, all-time highs. This is a J-hook breakout that has just been working along the breakout level. This is not really a Morningstar because there's too much body on this candle, but it kind of gives you the same feeling. We had one day pullback that was really an evening star there, but then the bulls reversed it right back up, and we're sitting just above the breakout level. We've got support down here off of these highs, off of these lows. And so that's just below that's where we're going to set the stop loss. Looking at fib extensions again as our targets, and we're just going to sell into strength. So we're going to have our stop or have our exit just below each of these levels. That's how I came up with the 50.10. That's 4 cents below, and I think I said 47.20. That's a couple 3 cents below the 38.2. So that's how we come up with it. So we're risking 4.4% or 190 bucks with only 100 shares for a potential of 9.28% at the first target, which would be a $400 gain. So that's a little over 2 to 1. If we work this particular plan, we've got sell 50 shares, sell half of it at that first extension. We're picking up almost 200 bucks or 9%. And then the last half we're selling at that 50.10. We'll pick up another 340 bucks, which is almost 16%. Overall, that gives us 12.5% on the trade or 540 bucks. So that's not too bad there. 12.5% on that particular breakout. All it has to do is keep trend and follow the long-term trend as well. So it's been coming up and stepping back, running up and stepping back, and we're expecting the same thing to happen again. So that's the trade. That's the trade plan for WD. Let's step over to, yeah, okay, fine. Let's step over to the next one, which was Pack B. Now these are going to start to get a little more dicey. Let's look at the, that's not the right way to say it. They're getting a little more outside of my normal rules. Let's put it that way. I don't know if I would say risky. It's outside of my normal rules, and I'll explain that here in a moment. But these are RBBs. This is a round and bottom breakout. The blue line's your 50. So we've got the 50, the 20, and the 34 exponential. 50 and 20 simple, 34 exponential, all kind of laying on top of each other here. Today's big, almost 6%, 5.7% day. could really be considered a bullish engulfing, if you will. So this is a day of indecision yesterday, small body long wick, day of indecision, and then we engulfed that today and broke up through the 50 EMA. We've got a level of resistance here that I was hoping we would close above. We didn't. And so I'm not looking for an entry here right up against resistance. I'm waiting for an entry above this resistance level. And in fact, what I would like to see, ideally, let's see if I can't draw it. In fact, let's use this color. Okay, that's green is fine. So what I'd like to see is something like this, probably not that tall, but something that comes back here and tests that tomorrow, maybe with a wick that tests that and comes off of it and give me a chance to buy Monday, right in here, just up above it after retesting that level. That would be ideal for me. So that's what I'm looking for. We're looking for a run up here to this high, and I think, yeah, if we go clear back over here, you can see that we've had some touches back in here. So that 574 level is in fact a potential resistance level. And then we got a huge gap up here until we run in, about 680 or in that area. So what's the trade plan look like? On PAC-B, I'm looking at a buy at about 508. So I'm looking at something to come up above here tomorrow and stay above it, give me a chance to get in close to it, but above this 504 type area. So I'm looking for, 5.8, 5.10, someplace in that area. And then I'm looking for a first target just below this 574 level. I call it 570. And then I'm going to get out, about a nickel before this 680 level. So let's call it 675 with an initial stop here about 470, using these highs to protect our stop. So we're looking for a little support here. If it drops back down here, I was wrong and I need to be back out. It's not ready yet. You could put it up tighter if you want, but based on the ATR, I think you want to give it a little bit of slack here. So using that 470 level for the stop, you can see that it's only about 1.5 to 1 running up here between here as your risk and here as your reward. It's about 1.5 to 1. If you were to get this up a little bit higher, if you felt you could get away with something like this, you would have a better looking trade. So let's call that 485, just for argument's sake. If you did that, you would be up over 2 to 1, and that would be a much nicer trade. But where this really looks good is once we clear this hurdle where we've just had one touch really for the past year and a half, almost 2 years. And if we can get past that, we've got clear sailing until we are up here filling the gap. And the 200 will certainly be in that area by the time we get there. So that's what makes this one very attractive. 11.5% up here to this first target, another 30 or a total of 32% up to the second target, and that's going to be a nice trade. So that's how I look at that one. Okay, sure, let's save it. What was the next one? DVAX. Similar type situation. Let's look at DVAX. This is another rounded bottom breakout. So we've long protracted downtrend, fell far away from the 50, the 20 followed, we formed a bottom, and now we've broken back up through the 50. The 50, 34, and 20 have all turned up, and we have this nice pole and a pennant that has formed, and we are now testing the ends of that pennant. Let's dig in a little closer so it's easier to see. So you can see we are testing the top of that pennant and looking to break out. So initially I'm going to be using this level here as the stop, this level of support, looking for an entry above this to signify that we have in fact broken through both this little bit of resistance here and the downtrend, and looking for a first target up here about 691, and that's a little bit arbitrary. It could be anywhere in this range here, you know, wherever you think. But I just, to be conservative, I use this this top of this first body, and then we've got another beautiful gap to fill up here to, you know, $9 and change. So what does that trade plan look like? Using this down here at about 560 as a stop, so just down below this, and an entry of 610, which is about 7 cents above this resistance level. For 400 shares, which probably a little bit small, but that's okay, just needed a round number I could divide up. With 690 target and a $9 target, you can see what that does for you. It only gives you about 1.5 to 1 on this first target. You can see there's your risk from here to here, and there's your reward from there to there. So that's not as nice. Now if you had moved that up a little bit, it'd be a little better, but for argument's sake, this is how I have planned it out. That would be a little bit much for me. Also, that 8.5% risk down there, some people are not going to be able to stand that much risk. But again, this has some tremendous upside, and it's got a nice pattern set up here, and it's a pretty clear pattern. You know, you can see these multiple highs that are defining this pennant, and these clear flat lows that are defining the pennant in this RBB. So I think this is worth a strong look. Again, this is kind of a Morningstar type. Now it's not exactly, it's not textbook. Yesterday's candle was not a true doji. Today's candle had a lot of wick to it, but nonetheless, the bears were in charge, there was indecision, the bulls are in charge. That's what it's telling us. So I think this is a nice setup, and has the potential to be quite a bit better than that 1.5 to 1 reward to risk ratio. Again, you can see how I'm using support to defend my stop. I'm using any potential resistance to define where the targets are. So I've got a valid reason to put this. We've got good patterns. We've got, you know, basically two patterns, the RBB and the pennant. And, you know, this nice little rounding pullback, which hopefully will turn into a J hook there. Let's see, what's the next one? The last one is CEMP. Similar situation to RBB. Let's pop over here. I guess there is no history on this. Back in this area. So you can see this is RBB. We fell away from the 50 up here, and the 20 pulled away as well. We fell down again, and then we formed this strong bottom here that's been going on for 1, 2, 3, almost 4 months, right? At least 3 months. And now we have started our way up. We've broken back up through the 50, the 20, and the 34, and the 50 have all started to curl up. and we're looking for a reason to buy here at this point is what it really comes down to. You know, we've got a pattern and we've got the trend moving the right way. Higher lows and higher highs, well, higher lows anyway, but we don't have a pattern here. So I set this as a resistance level off of the bottom of this body and the tops across here. So 420 is what I'm looking to enter, and I'm looking for that on a bullish signal. You know, ideally we'll get trader's best friend, we'll get a bullish engulfing, we'll get something to get us up there on Friday so that we can get a nice entry on Monday, someplace right around that 420 area, hopefully just above it. And in that basically mammoth gap that gives us, you know, 33% up here to the next resistance. So that's what we're looking for, and let's see what we've got then. So I'm looking at a 425, so just above these highs. So 425 entry, looking at a 475 first target, which is probably up here. Yeah, 475 is this high, the high of that wick. And a second target about a nickel below this 570 to fill the gap. If I work it that way with a stop starting out down here in along these lows, so we got about 390 as a stop, using basically the highs of these wicks and these bodies as our protection. We are looking at about 1.3 to 1, so that's not that great with this being your first target. So I guess I should drop a line in there. Let's put a line in there. So there's your first target. So you're going from here to here is your reward, and there to there is your risk. It's only about 1.3 to 1. However, you got a tremendous upside. So if you can risk the 8.5%, and by the way, in this particular case, I used $250 as my max stop. And with the 700 shares I chose, which was a little bigger than what it recommended, that's $5 extra of risk to the stop. For $5, I'm not going to talk about it. So that's not ready to go now, but if we get a good move tomorrow, a bullish move, it'll be set up for a Monday, a Monday trade, possibly end of the day Friday, but I see no particular reason to step in front of weekend risk. Yeah, 3 inside days, so 3 days inside this strong bullish candle. It's just profit taking. But again, that's not a it's not a bullish signal. They could take profit for a long time, or it could fall off. But that is a good indication that it's just profit taking and not falling out of bed. So this is a good setup, and again, I'm looking for an entry right up in here, 4 1/4, something like that. So basically, that's how we're planning trades. We're, in this case, I've got no candle signal because I don't know what I'm going to get tomorrow. Ideally, on Monday, I would say, well, it was a bull engulfing on Friday, or it was a trader's best friend on Friday, or something like that. But we've got the rounded bottom breakout. We've got a nice trend with rising highs. And we've got a lot of upside here, particularly to the second target. Any questions? Where am I at? There we go. Just need to flip down through these. I will put a link to these slides on the YouTube page. I guess the description section of the video, and you can. I'll provide them in the room if anybody else has their. Or no, there's not. If you're a version 1 owner, then version 2, you will get, per normal, or just as a normal update. You're welcome, Tom. It's it's a labor of love. Evan, for a new user, a new purchaser of Trader Vision, we're going to a software as a service. They call it SaaS model. Is this the 3-month special? Andrew, I'm not sure what you mean. I'm not sure what that is. I'm losing my train of thought, guys. I'm sorry. If I don't answer your question by any chance, you can email me. There's my address there. If Omnovi doesn't have the tools for me to upload slides, or it would be a clickable link. Unfortunately, this room doesn't have. Son of a gun. There we go. Yeah, this room doesn't have the ability to upload slides, and so it's not a clickable link, but it's ed@tradervision2020.com, and I will respond to you. I also want to point out that you can search YouTube for Trader Vision 2020. We've got a channel. You can watch this video there after I get it rendered and uploaded tonight, and it will also be on the tutorials page of the website. Now, as I was saying, version 2 will be sold as a software as a service or a subscription for those of you who are not in the software industry, but it will install locally, Evan. It will install locally. We will have the ability to do cloud-based backup if you prefer, but you can do local backups as well of the database, but that's something we're going to offer. It is not going to be web-based, Aaron. It is going to be run on the local machine. We may at some point go to web-based, but we are not there yet, and we do not plan to go. Yes, it will run Mac and PC. We are discontinuing Linux because there are essentially no Linux users. There are very few Mac users, for that matter. Evan, yes, the price is going to be $37 a month for the stock ETF versions. As soon as I get this sucker launched, I've already begun the design. I will get into the development of an options add-on, and when that option version or option add-on, however you want to look at it, depends how you use it. But an options-based version is released. That will have a different price. Right now, we're tentatively looking at $47 per month for the options version, and then you'll have the ability, for some people who want both, you'll be able to do both, and there'll be a price for that, but it will probably be, I think it's $57 is what we're looking at for the combination. Do updates clear history? No. So if you're a version 1 user and go to version 2, no, it does not clear your history. you'll have the historical trades. It's the same way as when you did updates of version 1. I think we're at version 1.91 now. So when you went from version 1.9 to version 1.91, it did not wipe out your trades. Peter, the question for the video is, can you keep using version 1 instead of upgrading to version 2? I don't know. The reason that I say that is because, and I was talking to the website guy today, we're changing the I don't want to get too much inside baseball on you, but Andrew, I'll address that here in a moment. But on the using of version 1, we talked to our consultant for website matters, and he's pushing us to change the tool we're using for generating licenses, and in doing that will require us to rework all the licenses, and so my suspicion is that you're going to need to upgrade to version 2. But with all of that additional features, including automated publication or population of all the data, I really don't know why you would not want to. But you know, I suppose you could have a concern over upgrading. Now, Andrew, your question about give us a try for 3 months for 212.50. If I'm not mistaken, and that's something that you should talk to Rick about. I believe that related to the hit and run candlesticks subscription, service subscription, and right way options service subscription. So the trading rooms, or possibly something else. I don't actually know what that email said, but I believe that's what it was for. I'm almost positive it had nothing to do with Trader Vision. Okay, it's, well, let me just type it into the chat. It's ed at tradervision2020.com. There you go. And actually, that should be a clickable link. No, Andrew, this is Ed. This is Ed Carter. Sorry about that. Muni, you're that's you're more than excused. I know it's the middle of the night over there, or getting close to morning now. I will upload this video to the website this evening, and it will be available both on the website and on the YouTube channel. Again, you can search YouTube for Trader Vision 2020 and you'll find the channel. Please subscribe. Please, if you like our videos, please like them, give them a thumbs up. And you can also visit the website, hitandruncandlesticks.com, and go to the Trader Vision 2020 product page. In particular, go to the manual tutorials page, and that's where you'll find all of our video tutorials, as well as all the workshop videos at the bottom of the page. Yeah, I'm about talked out, Evan. Thanks. Okay, if there are no other questions right now, I'm going to go ahead and turn off the video, but I will hang around.